Thank you very much, Mr. Chairman. Thank you all for your testimony. This has been fascinating for me because I can remember when I just was a new member of this committee, the head of the Wisconsin Higher Education Aid Agency coming to my office and in a response to a question saying that he, in his experience, thought the guarantee program was wildly costly to the government and suggesting a direct type loan program which he thought would be much more efficient both for students and for the taxpayers. We did try it out despite a lot of doubts on a 3-school basis, including Marquette in my own state, and now it's been expanded and we've seen competition between the two, and we're finding that the direct program is being scored. I can't believe it. I think it's excessive, but $94 billion saving over 10 years, $9 billion a year, couldn't possibly. I mean, no, obviously with that much money you can provide a few perks and little extra tweaks and bells, but I'm not sure it's worth it to the taxpayer when the terms of the loans are the same to the students in the schools. So I just would like to ask Mr. Shireman if you could tell us how you're doing to lay the groundwork for expanding the direct loan program. I mean, you're going to try to switch by July 1st, 2010. Could you tell me how many schools do not have their participation agreements set so that they can move to the direct loan program if they choose to do that?
I don't have a precise answer to that question, but we are conducting outreach right now, contacting schools that are not yet making direct loans or have not conducted those initial steps. We have also invited the higher education associations as well as members of Congress to let us know about the schools they're most worried about, the schools where there's maybe one staff person who's handling federal aid, and it's important to get them in early, talk with them about what the steps are, so that they can take those steps. Because it's a relatively minor addition to the existing efficient Pell Grant process that's run by Accenture, that front-end origination side is not the biggest concern. The biggest concern is we have to ramp up the servicing capability to collect on those loans, and we have the previous administration actually started that process with an RFP that we're in the process of completing.
Now, other countries have gone to a direct loan program. I think Great Britain and Australia and New Zealand. They have an additional feature which gives borrowers the option of repaying their loans through the Inland Revenue Service or their equivalent of the IRS. And if we do have a direct loan program, we could save collection costs and default costs and so on by giving people the option of having, say, up to 15% of their income withheld from each paycheck, and the loans automatically rescheduled through the withholding process of the IRS. Would the administration be at all open to looking and exploring whether us doing here in the United States what's already being done in the United Kingdom and Australia and New Zealand would make sense?
In those other countries, which are very interesting programs, all of the participants are paying off their loans as a percentage of their income. And we've made the policy decision here that the majority of borrowers are probably going to be fine paying a flat payment based on the amount that they borrowed, but that there are some that need income-based repayment and that type of help. So it's more on an exception basis here. So it probably doesn't fit with the system that we have. I'd be glad to go back and take a look at it, but at this point we're focusing on really using the system that we have developed over time here.
One other area, having several people, I think someone testified here from Vermont, the guarantee agency in that state. It's my understanding that guarantee agencies in many cases have close relationships with private lenders, and one of their missions is to provide oversight over lenders. Is that an area where we should be ourselves exercising more oversight to make sure that they haven't gotten in bed with each other rather than supervising?
Well, certainly there are some situations where there are close relationships between lenders or secondary markets and guarantee agencies. There has been some increased oversight of that situation over the past couple of years, and it is an area that we'll continue to look at. It is of concern.